All right, welcome to the Futures Initiative Trading Recap. I'm here with Dubster, and we are going to recap our trades for the day. Currently on my chart, it is cluttered with different zones of different time frames. I'm going to go ahead and turn it over to Dubster to go over his trades first.
Hell yeah. Let's check this out. Share. Is it working?
Absolutely.
Hell yeah. All right. So today's trade was actually not one of my main strategies, but I went ahead and took this trade based on something that I've been back testing. So I wanted to go ahead and forward test it. I knew today we were dropping and we were playing off of many fair value gaps off the 15-minute. We ended up stopping around this specific zone here, which there's a fair value gap here. What I really wanted to take was a strategy that I wanted to off the 1 hour, which I call a healthy order block. But as you guys can see, I never dropped down to this zone. So we got stuck in this specific area here with the fair value gap left over from the 15-minute in this specific area. As price action was dropping, I went ahead and once it entered this zone, I eliminated this fair value gap from here, and I went ahead and dropped down to the 5 minutes. What I wanted to see exactly here during this time, if it was going to go ahead and drop so I can take my full position in this specific area down here where I normally play off of this strategy, or was it going to go ahead and just come back up, grab the fair value gap up here. At this specific moment, I was just waiting for a specific strategy that I've been trying to back test called the ICT Silver Bullet. Obviously, I tweaked it myself. It's not specifically the way he does it, but I have been back testing a specific way. And the way it is that the first fair value gap between 10 a.m. to 11 a.m., you look for the first fair value gap on the 5 minutes. That's the way I've been going. I back tested it. Depending on based on how this candle looks, if it's a green candle, I go long. If it's a red candle, I go short. I always play it off the Gann box here. So based on this fair value gap, the Gann box entry was on this long position here. My stop loss was set at this lower wick. And my target was the first break of structure. And then obviously my second target after that was this. This was my main target right here. At least the 50% of this is what I really wanted to target. So I had my main profit all the way up here. Runners would have taken this second break of structure. But the reason why I was really confident about this trade was because we had a lot of consolidation here. And I did expect this to go back up. But I also was expecting it to come back down. But I kind of wanted it to play the quick scalp going upwards, grabbing the fair value gap from here and then coming back down. Once I dropped to the 1 minute, as you guys can see here, what I was kind of the reason why I was so confident about this trade going long was because we had a break of structure here on the 1 minute with so much momentum that we left the fair value gap here. We left the fair value gap here. But little did I note on today's trade that we left another fair value gap here. I totally missed this. This trade, I was waiting for this specific fair value gap to come and be fully grabbed on the Gann box, which is at the 0.5 value, and enter there. The reason why I went ahead and I put my stop loss here was because of the previous 5 minute, but I never took into account that there is a small fair value gap here. In this case, I would have ignored this one, which I really did in this case, but I would have never ignored this fair value gap since it was just so close to my stop loss. I would have done it down here. This would have been my stop loss if I would have noticed this, but I missed this. So I went ahead and took a loss because I went ahead and did my original position on this stop loss. It wicked me out here a couple ticks before that, and then it went ahead and did another break of structure up here. And little did we know, it actually took off and took the second break of structure up here. So it grabbed all the buy side liquidity on this section here. So a lesson of the late day today was that my positioning, I believe my entry was fine. I just think that I misread this and I should have judged it a bit better and should have seen this small section here and just put my stop loss at least below this wick. I think that's what I should have done. I felt confident about the stop loss because there was a lot of resistance around this area, so I expected it to bounce. Problem here is that I didn't think it was going to go below this specific wick on this fair value gap wick, so I went ahead and played off of that. But other than that, I did take a loss on this trade, and unfortunately, I did lose it. But you learn from your mistakes, I say. And this was a big mistake today. If not, this was my stop loss was set at $200, one mini contract, $200 stop loss. If I would have dropped it down here, it would have been about 250 stop loss, 250 to 60 for a total gain of this section right here was a total of, to round it out, was $700. But up here was about $1,300 or $1,400 just in one contract for a mini. So it was a nice trade. I just misread it today, so I took a loss on this hit. What do you think, Juan?
Very nice. So I'm curious in that area, and I too trade ICT concepts. Do I trade them perfectly? No. Am I still learning? Always, as we all are. But take a look at that fair value gap as you saw on the 1 minute chart where you saw it drop lower. Let's go to a 5 minute chart. Let's take a look at it. Yeah.
Mm-hmm.
Okay. Now, what do we know about this?
This is an order block.
An order block, right? But what type of order block?
Bullish.
So according to the ICT concepts, that is a propulsion block.
Mm-hmm.
Because you see how the candles do not dig more than halfway into that order block.
Yeah.
Yes,
Yes.
it may come down. Great. Yep. Goes right back up. Retraces, but takes out the liquidity. But the entrance, the prompt would have been, okay, that red candle, the first one, after it came back down at around 10:30, it said, okay, I'm okay with getting in as long as we don't break the low.
In this case,
Right.
would you choose this low? Is that what you mean?
No, I meant the low of that candle right there.
Oh, you would get in on this candle.
Because think about it, look at it. There we go. Now, let's take the Gann box, draw the Fibonacci, top to bottom of that balanced price range.
Let's see.
Right there. Where's that 50%? Pull it out to the, pull it all the way out.
This guy.
Yep. To the other side. See what I'm looking at?
Came back down, grabbed this fair value gap instead.
Came down, mean threshold.
Oh, I
Rapid.
see what you mean.
But actually, yes. So remember, when a fair value gap is run through, what acted as support will now act as resistance and vice versa. Look at the bodies of those candles that it rejects off that fair value gap or that previous fair value gap. And also went straight into, well, hit the golden pocket, but I would like to see what that would have been in reverse from a higher time frame.
This is exactly what we would have. We will have this in picture coming back down here.
Boom.
Going back up.
Right.
I did not see this today.
That's okay. Look, but that is why we do these trade recaps, is so that we
Yeah.
can see exactly what's going on.
Hmm. Yeah.
But I think, you know what? The setup was there, the thought was there, the entrance was there. It was the initial entry that, albeit slightly off, because you were trading minis, can result in quite a large loss.
Yeah. Yeah. So I have to respect the specific stop loss that I normally do.
Exactly.
Hmm. And it wasn't that bad, but I've seen this happen before. I've lost to this specific style, this specific error again before. So
Mm-hmm.
it's just something I need to catch myself because I ignore these small ones a lot. But yesterday I didn't ignore a small one like this and it bounced off of that specific zone. So that's just something that I gotta keep in mind all the time when we're doing these trades. That if I'm expecting this specific fair value gap to be rejected, is there anything down here that has enough power to grab it and use it as a magnet? So that's just something that I have to keep in mind. Because something like this, I mean, I should have been able to just keep it down here. There's no
Right.
reason for me to not have it down here.
Well, if you think about that exact setup, we see that quite often in larger larger time frames.
Yeah,
So,
yeah,
but without that's fantastic. So, you know, we we were all green on the day. So let's start with that. That's a huge win.
yeah, definitely.
Going back and analyzing, how could we have done better? Although we won, is just next level. That's how we become even better and really refine our craft.
Yeah. And then in this case, the trade that we did today in the entry point, I mean, a different strategy. It's not the normal one that I normally use for futures, right? This is just a completely different one. So it's just something that I need to understand that it was just a different strategy from today.
And that's okay because again, we're just all going to continue to learn and pick it up as we go.
Yeah.
Well, that's
Hmm.
fantastic. Is there another trade that you wanted to recap?
Yeah, there's one trade that I want to recap here. So this is trade that I wanted to take on options. And as you guys can see, the setup that I had here, I actually did wanted to follow the original strategy that I do play off normally from a healthy order block. And the reason why I never entered was because it never entered the specific area that I wanted it to get in. And as much as I was itching to go in these calls because I was very bullish, I never entered once just because I kept strict to this rule. So just for those watching, I went ahead and I always draw from the 1 hour. Um, I play based off a order block that has a fair value gap. That's the reason why I call them a healthy order block. In this case, as you guys can see, this specific zone is drawn into this area. My entry point will always be the GAN box for a 0.5. Sometimes what I have done, and I've been playing, I'm forward testing this at the moment, but I've been doing order blocks, including the GAN box with the order block at the same time. And if I would have done that today, this is what I have been doing, and I've done it in a couple other trades. I would have actually sniped the entry at the 0.5 level today, and my stop loss would have been that order block as well. Now, on these specific trades, I normally take, since obviously I can't snipe them, I normally take 2 strikes out of the money when I trade on options. But this is a really nice setup that I could have caught as well. But just based on this specific style, trading off the GAN box, including the fair value gap with the order block. That's what I've been doing. So I'm currently forward testing this. Obviously, today I did not take this trade at all, so I did not trade options. There is no setup for me. but just recapping it now and looking over how I could have done it differently, this would have been a really, really nice trade.
Absolutely. And, part of the process is seeing what setups formed, understanding how they formed and what they look like. Because
Yes.
soon this becomes second nature.
Yes.
So both of those are fantastic trades. I actually took the options one you were talking about. We had slightly different zones. Mine was simply to run out the liquidity.
Okay. See, and my target was this high of from pre-market. That was my target the whole time, which we almost pretty much hit today. But this obviously was just holding throughout the whole day. And
Right.
before lunch today, we did see 100% on the contracts. So that actually was a good thing. So we would have been out around this specific time zone. We would have never hold throughout this whole thing. So that was nice to watch. The fact that it did run where we wanted to. It's just the fact that all right, my entry point in this specific case, the fact that it was chopping so much, I hesitated and I stayed true to my position, and I did not enter this trade unless it was gonna actually touch me. So wick me in. But I think the execution was nice. For target point, it wasn't that bad.
I think that's fantastic. And I think it's definitely great to hold in mind for the future.
Yeah, definitely.
Cool. Well, thank you so much for recapping your trades.
Yes, sir.
Right. Cool. So, Dubster and I actually took very similar trades. The one, so he was looking at QQQ and SPY. I actually had SPY here. I didn't have a specific level drawn outside of this 1 hour fair value gap, but I labeled take calls here because understanding that the draw on liquidity from pre-market would have needed to happen. We would have needed to take out the liquidity, albeit small, just barely. We're talking like 10 cents. Took the calls here and they ran. That was enough for us to get in, enjoy 100% plus play. And even on the 5 minute, we still see that we have a liquidity void right up here. So that'll be good to look forward to tomorrow. Looking at NQ, I did have a fair value gap, a 1 hour fair value gap right down here that I wanted to be hit. We were, oh my gosh, 4 bars away. It was crazy. But my indication to get in should have been right here. This immediate rebalance creating an order block, refusal to go lower. But this immediate rebalance, because we came up, came down, failed to take out the liquidity, ran up, took out the immediate buy side, came down, creating the propulsion block, and ran the buy side, the short-term high up here. Of course, we bounced around, but if I take the 50% of the order block right over here, or the balanced price range, then, oh my goodness, we are just right about there. Now, I look more towards what does the body of the candle show me rather than any other part of the candle. Unless we are clearing fair value gaps, I want to understand what is the body of the candle telling me. So it tells me that we came back to equilibrium and ran the highs. But as we saw in Dubster's trade recap, we came back to a previous fair value gap and rejected off of it. immediately. Thus, so this was where I had entered in long, took profit up here, took a scalp on the way down, knowing that we had created relatively equal highs, that this buy side would eventually be run. We saw the fair value gaps on the downside. Again, this is on a 5-minute chart. So I give these fair value gaps some weight, not as much as the 15-minute, hour, 4-hour, and daily charts. But we came down, took out some sell side liquidity, and then we based. Okay. So let's go ahead and take this price range right here. Okay. This is the price range I want to look at. We notice that we are coming from a premium to a discount. Okay. And it is refusing to go back to a discount. Therefore, this would have been the indication to continue to go higher, knowing that the relatively equal highs would get run out. So today was more of a scalping day. No, something that I definitely want to learn is to be able to hold the trades longer and not scalp my way up and scalp my way down, scalp my way up, and continue on as such. It's not sustainable. But again, as we continue to grow in trading, our skills will be more refined. So my initial goal was for us to take a run at the highs up here, take a run to the top of the daily fair value gap. But let's see what happened in the wake of the day. So on a 15-minute time frame, the only fair value gap we have left is this one right here that we're currently trading in the Asian session. But what else do we see? We have a lot of sell side liquidity down here, and we have some buy side liquidity up here, this long wick.
Yep.
Relatively equal highs. This is going to get run. I know it. I'm waiting for it. And I can't wait to see if it happens pre-market or during the US market tomorrow. Let's continue on the 1 hour. What are we seeing? Right? We have a fair value gap up here. We have another fair value gap up here. Another one up here that was actually on a 4 hour as well. But this would have been a great indication to continue to go higher. We have failed to go lower. And where we were inefficient on the buy side, we then crawled our way back with all these strands of liquidity to the buy side, where believed by just a tick. Oh, never mind. We didn't. We have not officially run the buy side yet. Interesting. That'll be great to see what price delivers rather soon and see if we can get a run on the buy side. Next, let's go up to the 4 hour. What are we seeing there? Amazing. Now, this is the great part right here. What we just saw on the 5-minute, that propulsion block. We're going to see that. Let's see if we get that right here. If we get that right here, I fully expect this fair value gap on the daily to be taken on the upside, as well as buy side liquidity from last week. That's fantastic. So now we see on the 4 hour, we have two fair value gaps right over here. We have one up here, and we just have a lot of buy side liquidity up here. Good Lord. Again, these are all mental notes. Next, we'll go to the day. Oh, that's interesting. We almost went down to the 1 hour fair value gap and closed the daily fair value gap. Here's the interesting part. We now have a fair value gap on the daily chart right above, I guess, still a fair value gap
Yeah.
on the daily chart. It's very interesting to see a scenario like this, because then it begs the question, okay, well, which one's going to get run first? So I think we need to really look towards the Asian and the London session to see what liquidity was drawn on. We know that on a higher time frame, if we want to take this on the daily chart, if we are looking to go long, we already have that. If we're looking to go short, we have that as well. So the question is, where are we going to go? I'm very
Yeah.
eager to see that. And then let's even check out the weekly chart. Oh, beautiful. Beautiful. Look at this. Relatively equal highs. I wonder where this line retraced to last week. I bet it is mean threshold. Let's go ahead and see. Oops. Sorry about that. Let me go ahead and bring it down. There we go. Yeah. And straight to it. Gosh, that's crazy how we just have a massive wick on the top side, and we went into consequent encroachment of this wick. For
Yep.
for those of you who are very new to ICT's terminology, I would love to be able to explain it best, but ICT explains it better than anyone ever could. I highly recommend watching his mentorship 2022, 2023, and the 2016 mentorships. You will learn more than you have ever imagined. But this is crazy because we also have a small volume imbalance on the downside. But this is just nuts. I'm very curious. I want to say that we see more upside, but we really need to see what tomorrow holds. As for our current trades, today was an interesting day because today was an entire clawback to get back to where we were pre-market and in the London session. We literally just retraced a bit of London. But
Yeah.
with that being said, are there any questions I can answer, or do you have any additional comments?
Yeah, I have a question. When
Sure.
you were in the 5 minutes and you were identifying the proportional block, my question to you is, when you identify these, are you trying to only identify them on the 5 minutes, or would you like to see them in the 50 minutes? What would you recommend in this case? If I want to be a quick in and out 20 minutes trades, we know that you saw one right there on the 5 minute, right?
Right. So I would recommend, if you see a propulsion block like this, make sure you understand the scenario you are in. Okay.
Okay.
Remember, we had a quick sell side in a buy side inefficiency, sell side imbalance on the downside. So to recap this, it's going to have to come back with some similar strength.
Yes.
That's where this comes in. We based, created a lower low, lower high, lower low, higher low, higher high, and then we ran the buy side. But here is what I would say. Make sure when it comes down, and it will retrace, that when it does, especially because this was the lunchtime macro. So you had London close here, retracement, a fair value gap created, buy side liquidity there, take out the sell side, and then run the highs. So look for the propulsion block, yes. Then look for the retracement.
Okay.
Okay. Remember, the retracement is going to be key. Remember the breaker candles.
Makes sense.
Yeah. So I would definitely monitor that. And it's okay if it wicks down a few bars. That's okay. That's allowable. We're paying attention to the bodies.
Yeah. Okay.
So that is what I would say for the time being. And if you see here, the bodies are closing that fair value gap.
Yes.
We have a fair value gap right down here that could still be taken. And it might be taken because that would still constitute a higher low.
Yes.
So I would love to see what happens. We still do have the sell side liquidity down here. So that would be a good target. Personally, if I were to trade the Asian session, I'd want to see this buy side get run first, then take it down to the set, then take it down here.
Okay. So if you go into the 15-minute,
Mhm.
and then that way I can see how your chart looks on some out.
For sure.
Perfect. That's exactly where I want it. So I would like to take a bounce a little bit lower from that specific for rally gap zone that you drew.
Yeah.
To take to for market for price action to come down, grab those bottom wicks a bit more, and then take a bounce like from that specific area.
Right.
Yeah, that's
So
the area. So that's a good zone to see a possible rejection, a bounce.
right. I'm waiting to see all this get taken as well. And I think that might be taken tomorrow, might be taken pre-market. Again, we're going to have to see. And then tomorrow we can recap our trades again and continue on.
Yeah.
But I want to thank you for joining us today. Thank you, Dubs. It is always a pleasure recapping trades with you.
Oh yeah.
And I'm excited for where our trading journey is going to take us.
Oh, definitely. Yeah, I think we learned something new today. Um, a lot of different
Always.
setups were shown as in price action, but in the end, we did see similar approaches. We had pretty much our same targets, but just different entry points. And that's the thing I like about this because I can see exactly what you're thinking when you're doing these recaps. And we're always pretty much really, really close to our entries. Our targets are just so alike. And that's what I like, So I think if we can continue doing this, we're going to learn from each other. And I'll definitely learn a lot from you and be able to exactly see what you're looking at because you're obviously looking at something completely different than I am. But yet we're going in and on the exact same areas and I'm pretty much targeting the exact same areas as well. So that's what I'm happy about. and I thank you for that. I'm learning a lot.
Likewise, man. Look, it is fantastic that we trade a very similar setup, and but we're looking at it from two very different perspectives. So
Yeah.
we're both going to be learning a lot from each other. I know you're going to be learning a lot from you as well.
Oh yeah.
Well, again, thank you so much, and please join us next time for another trade recap.